Hey everybody, it's Will at VIP Mortgage, and it's time for your local lender update. Rates are a little higher today. The market's moving about the same amount it did right after our last improvement. We saw that improvement a couple of weeks ago, then we took a step back and then slowly recovered, and now we're taking another step back. And I think this just reflects some uncertainty coming into the Fed meeting this week, where they will discuss their next rate decision. The market does expect that they're going to cut rates again. Last time they cut rates, the market reacted negatively, meaning rates went up. And the reason for that is because the comments they gave were interpreted as a hawkish rate cut at that meeting. They said December rate cuts certainly not guaranteed, even though the market sort of expected it. And the big piece that we have been tracking, I've been telling you about it for weeks, is the unemployment number. Now, the Fed raised rates to try to slow down inflation, and inflation has been pretty close to the same as far as a monthly inflation rate for almost a year. We've seen little trends up and down, but it's like there's a new baseline for inflation. It's not as high as it was post-pandemic, but it's not down to the level they would like it to see it at. And then the other thing that the Fed is really concerned about is maintaining employment, and we are seeing job numbers that are raising the alarm that the Fed may have to cut rates, even if they don't want to yet, as far as inflation is concerned. And the reason for that is rates regulate spending, not just on an individual level, but also on a business level. And if companies need to cut costs and they're not able to spend as much as they would like to, they may have to lay people off. And one of the things we're seeing is we had a bit of a dead spot on real data for jobs during the government shutdown. We've been relying on other data and other metrics, and now as the official numbers are coming out, we are seeing that the economy is on a net losing jobs. That's a signal of a weaker economy, which would lead to weaker individual spending, which would bring inflation down. And it's one of those things where you want to keep a close eye on it and make sure the momentum doesn't pick up and the snowball doesn't get too big rolling downhill, because once it starts to a certain degree, it keeps going until something stops that momentum. The fewer people that are working, few people are spending, the slower the economy gets, and so forth. And so that's one of the things really to watch on the 10th when the Fed talks about rates. It is almost surely going to cut rates again. It'll probably be a small cut, just like the last two. But the comments they give and the forecast, their dot plot chart, that all could impact the market. The other thing to watch this week is the 10-year bond auction. Most of the bonds we track are 30-year bonds, but the 10-year, if there's strong demand there, that could help rates a little bit. And so right now, I think this week is kind of the last time that we're going to see any kind of shifts in direction in the market. As this data comes out, we'll have a clearer picture of what to expect for 2026. If there's anything we can do for you, give me a call, 719-232-7553.